Hey YouTube, Untamed here. Over 100 million people within the United States has an auto loan out right now. And for context, there's over 341 million Americans within the United States. So nearly 1/3 of all Americans has an auto loan out. Just last year in 2024, the national average amount taken for a new vehicle purchase was $41,000 and some change. $41,000. The national average new vehicle purchase price was $48,405. So people generally are only maybe putting down $6,000 to $8,000 on that new vehicle purchase. The rest, well, the bank owns it. In today's video, I'm going to highlight a number of stats, facts, and figures that really paint a clear picture as to why having an auto loan out is ruining the lives of so many Americans. So stick with me. We talk about it plenty on the channel, but the national average monthly payment for a new vehicle purchase just this last year is right around $760. So $760 per month is the average for one vehicle. And generally speaking, every household will have at least two vehicles. So it is not uncommon for a family to have more than one auto loan out. If you bought a used vehicle, the national average used vehicle purchase price just this last year was just over $525. Kind of wild, huh? We talk about it plenty on the channel, I understand, but I think it's very important to note the number of repossessions that are taking place within the United States right now. We're seeing an unprecedented growth rate of repos taking place. For context, back in 2023, we had right around 1.5 million vehicles that were repossessed. The banks took back the vehicles because people were failing to make those payments each month. Fast forward 1 year, 2024, we had about 1.85 million. So we saw about a 23% uptick in the number of repossessions here within the United States. Here in 2025, they're projecting it to remain status quo at 1.85 million, or perhaps even uptick a little bit up to 2.1 million vehicles. Kind of wild. Then when you combine those large monthly payments with the ever increasing insurance premiums that have over doubled in the last 2.5 years, and in some states we've seen a 60 to 70% compounding growth rate of insurance premiums, which is absolutely absurd. When you combine that with interest rates being astronomical right now, 7% being the national average for a new vehicle purchase and 11% if you were to buy a used vehicle purchase, it just really begins to add up. And for so many people, it becomes suffocating, right? When you combine that with the cost of your rent, cost of your mortgage, the cost of groceries, it just becomes death by a thousand cuts. And man, are we seeing it when it comes to repos. Because the first thing to go generally is your car payment, right? Of all the things that you can cut out of your life, you can't cut groceries. You need to eat, you need to have food on the table, you need to have a table, you need to have a house or a home to live in, a bed to sleep in at night. You're not going to cut your mortgage or your rent. The vehicle is the first thing to go if times get very tight. And unfortunately, that's what we're seeing across the nation. If you follow my channel for any length of time, you know that I go through vehicles quite quickly, okay? I love cars, trucks, SUVs. I enjoy having awesome vehicles. It's just a part of who I am, and it always has been. But I can tell you, since we have been pursuing a new house, we'll be moving here in a few months, we have actually purposely got rid of our auto loans. We went and bought quote unquote cheaper or more affordable vehicles, a 2020 Ford Expedition here, and over there my 2013 Lexus GX460. Both of them paid off. And that is a position that I found myself really gravitating to. I love the idea that we do not have these large astronomical monthly payments on auto loans, because even for me, it becomes a suffocating thing, right? I mean, every single month, dishing out $700 plus for a vehicle, it just, again, just feels like it's bleeding you out. So I understand why so many Americans really are quick to just get rid of their auto loans and do what we did here. Try to just buy more affordable vehicles, try to keep them on the road longer, provide that or perform that necessary maintenance, the necessary service, and just keep them on the road longer. It's not worth dishing out $1,000 plus just to have a nice vehicle. I've said it once and I'll say it again, the best type of vehicle is a paid off vehicle. And I mean that. You know, the peace of mind that you have is a weight off your shoulders, and it's quite liberating just knowing that you own your vehicle outright and you're not dishing out that huge payment that's really bleeding you out every month. And for context, for the folks who maybe have never purchased a house or built a house, it is in your best interest to lower your DTI or debt to income. And that's why we ended up moving our nicer TRD Pros that we had a Ford Raptor not that long ago. We got rid of those, we got rid of those loans. So our debt to income level could be more balanced out, allowing us to get a larger home loan with full confidence. And here tomorrow, I actually plan to sell that Lexus. I'm getting rid of the Lexus, I'm breaking even on it, I'm not making any money, not losing any money, which is very nice to have been able to do it. Granted, I didn't own it that long, has very low miles on it, only 14,000 and some change on it, but I was able to drive it for a little bit and still break even on it, even after paying sales tax, registration, all that additional stuff, and the window tint. So very grateful to have been able to do that. And well, quite frankly, if you buy a new vehicle, the chances of you being able to sell it for what you paid for it is extremely unlikely, let's face it. And that's why people find themselves in a pickle when it comes to buying a new vehicle. Pretend they go out and buy an $80,000 pickup truck, which has unfortunately become our new norm. They'll go out and buy that $80,000 pickup truck. Let's say they got the national average new vehicle interest rate of 7%. They pay it for, let's say, 3 years, half of their 6-year term that they agreed to for monthly payments. They pay it halfway down, about to $40,000. And at that point, 3 years down the road, you probably put at least 50, 60,000 miles on it. That truck right there is probably worth anywhere from $25,000 to $35,000. So you likely still have a negative equity on it, and you've been paying this huge astronomical monthly payment on that truck the entire time. It's sickening if you look at how much of that monthly payment is going toward the interest. Even at a 7% interest rate, that is a huge amount going to interest every single month, consistently bleeding you dry. You're not building wealth during this time. You're just pouring it into a truck that you're still ultimately going to lose on due to depreciation. Let's face it, we live in a TikTok world, a social media world where we're constantly trying to compare ourselves to what we see online or compare ourselves to our neighbors, right? The whole keeping up with the Joneses concept. And that's the unfortunate truth of America. And it kind of has always been the case, but it's been propelled with the advent of social media, I think, right? So many people will view a successful person as that individual who has $100,000 BMW, but a huge auto loan on that BMW and only $3,000 to their name in their bank account and $20,000 racked up on their credit card. But all we see is that person driving around in nice clothes in a BMW, right? And that to us has been declared as successful. But the guy driving a 1999 Honda Civic with $100,000 in his bank, wearing very normal clothes from Walmart, that person is deemed unsuccessful, right? Kind of funny, kind of sad, really. And I actually encourage you, if you're able to put just another $100 or $150 toward your monthly auto loan payment, you'll be paying down that principal so much faster. So much more of your money will be actually going toward paying off the vehicle. It may not feel like a large amount when you're putting another $100 toward it, but when you watch how quickly that actually drops that principal and actually lessens the duration of your loan, that's pretty nice and quite liberating. And the same can be said about your home loan, right? If you have a mortgage, just putting another $500 on top of your mortgage payment every single month can lessen your 30-year loan dramatically. So I encourage you to do that if you're able to. Obviously, easier said than done, and especially when everybody's struggling so badly right now, that additional few $100 can go a long way toward groceries and your day-to-day necessities. I understand. So although I've been rolling around in this 2013 Lexus here, it technically is the poorest I've looked. But if I'm being honest with you, it is the richest I've felt in the longest time. It's a paid off vehicle. There's no monthly payment coming out on that, and that allows my bank account to come up a little bit every single month in a notable fashion. So although it's the oldest vehicle I've driven in a long time, I feel the best because of it. Now, if you were to go buy a $100,000 diesel pickup truck, which unfortunately is a very normal circumstance for diesels today, if you were to go buy that and get that 7% interest rate on it, you would be easily spending anywhere between $118,000 and $122,000 on that same exact vehicle if you were to carry that loan through term. Whether it's 60 months or 72 months, you're paying an additional $20,000 roughly. So think about that. You're paying $120,000 for a depreciating vehicle, a vehicle that will likely be worth half that or less than half of that by the end of that loan. Kind of sad. And for fun, if you had purchased a new truck throughout the last year, year and a half, you likely spent well over $60,000. The national average truck purchase price in 2024 was $64,266. Over half of the truck loans out right now are over $1,000 per month. Let that sink in. A part of the problem is so many of the trucks today are just completely stuffed to the gills with technology, creature comforts, all these bells and whistles that just drive up that price tag. They drive up the MSRP tremendously, right? No longer can you walk into a dealership and go get a bare bones, sparse example pickup truck. You know, a utilitarian vehicle, cloth interior, steely wheels. Those are just impossible to come by. Instead, they want you to get the one with 22-inch rims on it, all the additional tech features within it, all bringing up that price tag to that $100,000 point. You can't just go out there and get that $40,000 pickup anymore, right? And even $40,000, that used to go a lot further just a few years ago. Not anymore. Let me state the obvious here. Vehicle manufacturers do this because it increases their profit margin. The same Chevy Silverado that is completely stuffed to the gills with technology, creature comforts, bells and whistles, that Silverado is going to have a much larger profit margin comparatively to the very bare bones example that's still coming across the same exact assembly line. So they figure if it's coming across the assembly line, taking up the same amount of space, might as well bump up that profit margin as much as they can. Go to any dealership lot. What are you going to see? You're going to see a ton of highly spec'd, highly trimmed examples sitting collecting dust. People can't afford those price tags now, but they did that on purpose originally to try to hike up the amount that they make. And with that huge number of repossessions taking place, it should come as no surprise that we are currently seeing the highest levels of 30-day, 60-day, and 90-day auto loan delinquencies within the United States, the highest that we have seen since the 08-09 recession. And while they're projecting if things continue as is right now, we're actually going to surpass that by the end of 2025 here. So for a lot of people, it just makes a lot more sense to either A, hold on to their vehicle much longer, not trade it in every 3 to 5 years, or purge their newer vehicles, sell them off, and get into something much more affordable. We're talking like that vehicle between $10,000 and $20,000. There's not too many options that are actually remotely reliable within that price range, but it is doable. People are doing it and just getting rid of those monthly payments. They're lessening their insurance premium every single month too, and watch how fast you begin to gain wealth, right? You build that wealth quickly when you're not fishing out so much money every single month in money that's really just depreciating on you and a ton of it going toward interest. So buying that $10,000 to $20,000 vehicle can save you tremendously just over 1 year. And just looking at credit card debt alone gives you a very clear idea as to how badly Americans are struggling. The national average credit card debt per individual within the United States is right around $7,300. That's your typical American. They owe $7,300 on the credit card debt. Per household, we're looking right around $9,500. And that is quite alarming. That growth rate has been unprecedented. And what is that telling you? That's telling you that people just cannot afford those day-to-day bills, right? Their day-to-day necessities without charging it to their credit card, which, might I add, typically comes with a 20 to 25% APR, 20 to 25% interest rate. That's a compounding rate that's just constantly bleeding people dry. All right, guys, I'll wrap up the video there. As always, I sincerely appreciate you taking the time to tune into these videos. If you find any value in it whatsoever, I do respectfully request that you please consider liking and subscribing. I talk through this stuff because it affects us all. It affects me, it affects my family. I think it's very important for us to talk through this kind of stuff and really try to help educate each other to try to do a little bit better with it, right? If we can get ourselves into a better position to where we're buying the right vehicles, negotiating the right price tags, or trying to just get away from all this debt, get away from auto loans, because that can be quite liberating. So let me know what your thoughts are. Appreciate you watching as always. Until next time.